Ladies and gentlemen, welcome back to PwC's Risk and Regulation News Channel. I hope you had wonderful holidays and a great start into 2024. And we would like to start again where we ended in 2023 with providing you with the latest news and the most important news around risk and regulation for banks. Just before Christmas, there was a very important publication coming from the ECB, which can be divided in two parts. First of all, there were the SREP results for the year 2023. And on the other hand, we have the SSM supervisory priorities for the year 2024 and onwards. And these two publications are so important that we would like to introduce them to you a little bit more in detail. And they're even so important that we plan to record some more detailed session on each of the topics. Today, I'm not alone. I have two wonderful experts of the SSM EBA office of PwC with me. First of all, I have Carole de Verny from our Brussels office. Hi, Carole, how are you?
Hi, Martin. Nice to see you again.
Hi. And here in Frankfurt with me in the studio, Stefan Röth.
Welcome, everyone. Glad to be here once again.
Okay, great. So let's start. Ladies first, Carole. You are an expert on the SREP results 2023 of the ECB. Before we start to get into the details, maybe for our first-time viewers, you could give us a quick overview. What is the SREP process and why is it so important for the banks?
Sure, Martin. SREP stands for Supervisory Review and Evaluation Process. And it's the ongoing supervisory actions taken by the ECB for significant banks, but also national competent authorities for less significant banks. And it's their ongoing supervision of how the banks perform across the various dimensions of risk, but also it covers their strategy and internal governance arrangements. And the results of the SREP are not only important to know how banks perform when it comes to meeting supervisory expectations, but it's also important to understand what are the next priorities. It feeds into the priorities based on the identified weaknesses of the banks.
Great. Thank you very much, Carole, for this first overview. I know that the SREP results have always two dimensions. First of all, banks really get grades, yeah. So it would be very interesting for our viewers to get an overview like how these grades may have changed compared to last year. And on the other hand, there's also always a qualitative assessment. Maybe you can say a few words about that as well.
Yes, of course. Obviously, all risk managers know that risk evolve and new ones emerge continuously. So the same applies to the ECB methodology and obviously the SREP results because the focus area vary from year to year depending on the identified priorities. From the SREP results this year, we can see that overall the results are stable, both in terms of capital requirements, but also in terms of results, with roughly 45% of the banks that are in SREP category 2, which means medium to low risk, with 52% of the banks that are this year in category 3. And it's a bit higher than last year, but it's actually explained by an overall improvement because there are only 3% of the banks this year that are in category 4, and this diminished by more than half. It was 6.9% last year, and these banks actually improved and then passed into category 3. So what we see is that if these results are more or less stable from last year to this year, we also see that this is not necessarily true for the different working blocks of the SREP. And we see that within those working blocks, there are differences and variations, but also depending on the business model of the banks, because we see that some banks are more vulnerable to some types of risk than others, strictly based on their exposure due to their activities. And so we see that there might be a lot of differences from one year to the other if we go into more details, which we will do later. But I'll just take one example. We see that this year there's a growing concern of the ECB on credit risk, which is normal. We see that every year, but specifically there's a concern about real estate exposures. And in this specific category, we see that the diversified lenders are hit harder than other categories of banks. So that is an example of how the difference can materialize across the different categories and business models. What we see also as a key point of focus of the SREP tool 2023 is identified weakness in IT risk management, including cyber security, including third-party risk management. And that comes not only from the fact that there's a big chunk of new regulation that will be applicable shortly, but also the macroeconomic context, where we see a rise in cyber attacks, a rise in related operational losses, and this explains why the ECB has dug deeper into those dimensions, and so we have more severe findings. Severe findings do not necessarily mean that banks do not perform well, but it can also mean that we investigate a new area that is a bit less mature than other areas of risk management of a bank. And lastly, the ECB is focusing a lot on the integration of climate and transition risks into the risk management frameworks. And so we see that in this instance, 30% of the banks have received a request for improvement when it comes to integrating climate risk into their daily operations and risk management frameworks.
Okay, thank you very much, Carol, for that overview. That was more the quantitative part of the SREP results. As we said before, there are also qualitative measures like recommendations from the ECB where the banks should definitely evolve. Maybe you can see a few words about that as well. Where did we see a lot of findings where the ECB was not really satisfied with the performance of the banks?
Sure, Martin, you're right, indeed. So it's not only about additional capital requirements, it's also, and I would say mostly about improvement plans that banks need to make, so the so-called qualitative measures. And we see that this year, roughly 90% of the banks have received qualitative measures. It's not exceptional. This number, this range is also stable. What we see is that the ECB is really focusing on, let's say, the biggest risk categories. So internal governance and risk management represents roughly 30% of the qualitative measure assigned to the banks. Credit risk is 24% of those measures. Operational risk specifically is 9% of those measures. And so that is request from the ECB to put in place an improvement plan in order to increase the resilience to the risk and the way the risks are managed. As an example, banks can be requested to improve their risk data aggregation capabilities through either a better data architecture, a better data governance process. Banks can be requested to improve their staging and provisioning under IFRS 9. They can be requested to improve the functioning of their risk function, either through better governance arrangements or enhanced staff number allocated to the function. These are, let's say, broad categories or remediation measures that we see, and for which we actually have helped a lot of our clients meeting the requirements set by the ECB.
Perfect. Thank you so much, Carol, for that overview of the SREP results 2023. Now, Stefan, to you. You made a already very detailed analysis of the SSM supervisory priorities for the year 2024 and the years after that. Maybe you can give us an overview about these priorities. As far as I heard, there are 3 major priorities of the ECB. Maybe you can give us some more guidance.
Yes, sure. Happy to do so, but don't hold your breath. If you have read last year's priorities, there are probably not too many surprises in there. However, and you correctly said that we have 3 overwhelming priorities that the ECB will lay at the foundation of their supervisory action in the next few years. And that is first the risk of macroeconomic imbalances caused by global shocks, caused by wars, caused by disrupted supply chains. So everything we also saw in the last couple of years. Second priority, also not something new, but something that is at the very heart of the ECB, is the whole topic of governance of banks and getting the right strategies, for example, when dealing with ESG risks. And the third overwhelming priority, and also something that already was evident in the SREP results as Carol just presented, is the whole topic of IT and cyber risk.
Yeah, thank you very much. Maybe directly going a little bit more into the detail, please tell us a little bit more details about the first priority, about the macroeconomic shocks and the geopolitical issues.
Yes, well, as I said, we saw a couple of large wars over the last few years. We now have the conflict in the Middle East. We had COVID some years ago, and all of these had a lasting impact on the economy. As I said, disrupting supply chains worldwide and leading in the end to a surge in inflation over the last year. Now, with inflation slowly receding, you may think that the worst is over, but the ECB certainly does not think so. I mean, it's their job to worry about the future, and they are perfectly right in doing so. However, what the ECB in particular is afraid of, that banks will need to find new sources of refinancing, given also that the TLTRO will need to be paid back to the ECB. Banks will have to put up higher costs to access this refinancing, and they will, of course, have to some extent also increase these costs on their asset side of the balance sheet. So there will be higher costs for all the customers of banks, and that means that some borrowers may not be able to cope with increasing interest rates, may default. We even see some first upticks in NPL ratios across Europe, and in particular with the pending crisis on the real estate market, that may actually lead to a lower credit quality, higher credit risk, and therefore diminished profitability of banks.
Yeah, thank you very much, Stefan. As always, where light is, there is also shadow, and the increase in the interest rate is definitely something positive for the banks, because when we look to the financial results of the banks that were published over 2023 and also what we expect for the year-end results of 2023, they will be very, very positive. But on the other hand, there are also some negative developments, especially with regard to funding and liquidity. You mentioned it already, and also the banking crisis in the US. Contributed to the concerns of the supervisors. Maybe you can say a few words more about that priority.
Yes, and I think in particular the banking crisis in the spring of 2023 is also relevant, very relevant for the second priority of the ECB, i.e. the whole topic of governance, because it was clearly spelled out both by the Basel Committee but also by the ECB that one of the key reasons for the spring crisis was bad governance at the affected institutions. And governance is also something that is high up on the ECB's agenda, also over the last couple of years, with very not so nice SREP results and continuing criticism from the ECB of banks' internal governance, board effectiveness, taking into account the internal control functions, and many other issues. And I think even if that sounds like not much has changed, what did indeed change is the tone in the ECB's publication, because they spell out much more clearly than in previous years how unsatisfied they are that some of their recommendations are not being followed by banks. And to single out just two elements, the first one is ESG, which I already mentioned, and the second one is risk data aggregation. You all know it's now 10 years of BCBS 239, and the ECB is of the opinion that banks have done too little, and the ECB has criticized this time and again, and their impression is that banks are not reacting in the manner that they should to this criticism.
Yeah, BCBS 239 is a good topic, leading us to the last priority of the ECB, and that is everything around cyber and IT security and of course operational resilience. Maybe also there some more details that are definitely in the focus of the ECB in the next years.
Yes, and there are basically two major building blocks that we need to look at here. The first one is cybersecurity, so making sure that banks are resilient in the wake of attacks on their IT systems. There is also the ECB's cyber stress test that is currently taking place, and this is, as we also know from a couple of surveys that we conducted over the last couple of years, one of the major concerns of all the CEOs of the major banks, that their systems will to some extent be compromised by attacks from hackers, in some cases even from state-backed or state-funded groups of hackers. Second major building block is how a bank wants to deal with digitalization. So on the one hand side, improving a bank's processes, making them more agile, more digital, something that the ECB thinks is still a big challenge for most banks, where they did not invest enough over the last couple of years. But also a second element is that banks will have to deal with new competitors in a digitalized financial market. There are the neobanks, there are fintechs, there are all kinds of groups, even the big tech firms like Apple or Amazon, who want to move to some extent into financial services, and banks need to find for themselves a strategy on how to remain competitive in this new environment.
Great. Thank you very much, Stefan. Maybe, Carol, one last question into your direction. As we discussed before, the SREP results of 2023 are looking a little bit more to the past, like what happened in 2023 and how happy or unhappy the ECB was. But why is it so important that the banks also look to these results, considering for the next years? What is the connection there?
Well, obviously, the first element is not to come across the ECB. It's the supervisor, so that has consequences. But I would say, to a softer extent, better risk management frameworks, better anticipated risk lead to better steering capabilities. And we are in a very troubled environment, both from a geopolitical point of view, but also macroeconomic conditions. So the better you are prepared to face the risks, the better conditions you are in to run your business.
Yeah, thank you very much. Yeah, both of you mentioned the macroeconomic risks that are currently in the market, and also the geopolitical environment that are posing significant risk to the banks. I was attending a conference in Frankfurt of the SSM in the beginning of December, and there everybody spoke about the most anticipated crisis ever. So everybody expects something, and of course the ECB expects from the banks that they prepare for the upcoming turbulences. I would like to thank you, Stefan, and thank you, Carol, for attending this short episode. I think it's very important to be prepared for both the priorities and the results of the ECB in the SREP process 2023. If you have any kind of questions or if you need support, please do not hesitate to reach out to us. All the contacts of the SSM EBA offices are included in the comments of this video. And please look out for the upcoming videos where we go a little bit more into the detail of each of the topics we touched on today. Again, thank you very much, Stefan. Thank you very much, Carol. Hope to see you soon again. Bye-bye.
Bye-bye.
Thank you. Bye-bye.